Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to look at some more examples of using the DP for potential support or resistance areas by using the last swing into the high or low. This is what we looked at in the last video, so I'd like to have a look at some more examples in today's video. But before we look at any charts, we have to look at our risk disclaimer. So just remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, and more importantly accept, that losses can and will and do happen. I'll say that again, losses can and will and do happen. All trade decisions are your own sole responsibility. Right, let's have a look at a 3-minute chart of the Nasdaq. That's an example I want to look at today. This is using the regular trading hours, the RTH hours, which was what we call the day session, which is from 9:30 to 16:15 New York time. So before today even opened, what I want to do is use our training mode and go back to basically around the close of Friday. Now can you see how this was Friday's low? Excuse me, I've got a bit of a cough here. And this is the last swing into the low. Do you all see that? There's our connected pivots. That's the low. This is the last swing into the low. This is what we're looking at in our video from a few days ago. So we go back to the pivot that starts the swing into the low, which is this one here. We right mouse click and do DP, and this gives an area of potential resistance. Can you see it, how it's on the chart even before today even opened? There it was for potential resistance. If I turn training mode off, you can see that today the market then gapped up and hit that area absolutely perfectly before starting to fall sharply. We actually got an automatic VS sell setup on a black MTP trend, so this would have been a valid setup for MTPredictor customers. So we right mouse click, do analysis, and you can see actually our main target for this is right the way down here. It's actually the DP of this last major pivot here. Here you can see the market is ticking down nicely at the moment, so will the NQ get all the way down to this level? I don't know. Perhaps we'll do another follow-up video and to see whether it does. But if you were nervous about this and you thought that actually a 20R profit, I mean that's how big that was, 19.9 or almost 20R, turning an initial risk of approximately $300 into, well, almost 6,000, 5,900, was actually too big, and that was too far away. What you can do then again is use the last swing into the high or low. In this case, the last swing into the high. So can you see here, there's our high. Can you see this pivot here? That's the last swing. Do you see that? Perhaps if I take off that analysis, whoops, I want to go back and put that that pivot back on, or that DP back on there. Whoops, didn't mean to scroll the chart there, sorry about that. So can you see how this again is the last swing into the high? Do you see that? There's the high, this is the last swing. So you right mouse click and you do DP, and this would give an area of support. Again, this is an area of support that would be on the chart even before the market got there. So let's place this analysis back on. And if you thought that actually this target here was too far away and you were nervous about holding it all the way through this correction here, let's just grab this and take it up to that DP level there, which the market actually hit at basically 10:20 this morning. But can you see at this level the profit would have been a very, very healthy 9.5R, or 9.5 times initial risk. Remember, it's not profits that are important, it's actually profits in relation to the losses, or in relation to the initial risk that's important. That's why we look at these as R, or risk units. So this would have been a very, very nice trade. So it's basically taking the resistance area from the last swing, there it is, the last swing there down into the low, and then using a slightly closer profit target than the one right down here from the last swing into the high. And that was a good example of a potential trade. And as you can see, that would have been a very, very nice trade, returning approximately 9.5R. If you were looking at all our automatic setups, there would have been some losing setups later on. It's always good to look at losing trades in videos. MTP trend is red, largely trend was down, so therefore you wouldn't be looking at buy setups, you'd probably be looking at this sell setup here. So if I right mouse click on that red sell bar, you can see that the market would have taken you in and then it would have stopped you out, so that could have been a losing trade. But remember, because we use position sizing to vary the number of lots, contracts or shares, that loss would be kept small at just -1R. There's also another one denoted by a history triangle there. That would have been a VS setup. Remember, VS setups are better or best when they are breaching an important psychological high or low. So this wouldn't be an ideal setup because that was not a psychologically important high or low, so that probably wouldn't have been one that experienced users would have avoided. But if you had taken it, again, it would have been a losing trade. It's important to look at losses at -1R. That's why we use position sizing. So if we had two losing trades there, -1, -2, and you'd taken that trade there and even come out slightly earlier than the actual original analysis, come out at that DP, that would have been plus 9.4 or 9.5R, and again 9.5R would have more than made up from from those two losing trades there. So a good example of using position sizing there to keep your losses small, not avoiding losses. Remember, losses can and will and do happen. That's what I said right at the start of the video. But I just wanted to show that this was a good example of, first of all, the high coming in at, the DP from the last swing into that low, and then using the last swing into that high as a profit target, but a profit target that was slightly closer than the one right the way down here. So if you're nervous, coming into that profit target would have been a very, very nice and logical place to take approximately 9.5R profit. So hopefully that's been another good example of using the DP from the last swing into the high or low to get areas of potential support and resistance. And as you can see today, that so far has nailed the very high of the day on the NASDAQ and given a very nice short trade. The main thing was just deciding where you wanted to take profit, whether it was at this DP or whether you're still holding and looking to run right the way down to the profit target there for a potential almost 20R profit. So a good example of using the DPs from the last swing into the high or low on an example that's unfolding today on the 3-minute NASDAQ.